Welcome back everyone. In this video we're going to talk briefly on Fibonacci. It's not something I use massively in my trading, but I do have a useful tip for you on Fibonacci, and I'm also going to show you the concept of premium and discount pricing. Now I think when you get further into trading you don't really need to use this concept, but it can be useful for many people to actually work out what is a good order block or supply or demand zone to sell or buy the market from. So the way we use Fibonacci in this kind of smart money approach, so to speak, is using premium and discount pricing. So if we mark this Fibonacci retracement tool on, you'll see that it looks different to what you've probably seen in the past, which is a bunch of levels from, 22, 36, or 32 point, I don't know, we'll know what they are. But basically a bunch of Fibonacci levels running up, 618, 78, and so on. I don't use that. I actually keep it very simple. I just have one large box separated by the 50% fib line. And then at the high, you can actually see I have the 88 line marked on as well. So this gray area, or from the top down to here, and then from here down to the bottom, shows premium and discount pricing. The low area is discount pricing. The high area is premium. Now, remembering what we said about supply and demand and why it actually works and how it works, when the market is overpriced, people are happy to sell there because obviously profit takers are collecting a lot of profit when the market's overpriced, and sellers also see an overextended leg of movement that they can sell into because the market is likely to soon see exhaustion. On the flip side, when we're in a discount price area, that's an area where the market is so cheap that it would be good to buy. So in a downtrend, how we use Fibonacci is mark it from, first of all, the top of the movement down to the low of the movement. And then when we see price enter the 50% boundary, it is likely that we're not going to reverse before we do that. Okay, sometimes we will, of course, but for the most part, the market is going to enter the premium range before selling off again. And as you can see here, we just came into the premium range but didn't enter it. And then we had one final sweep which entered into the premium range here before the market sold off again. So most of the time, we are actually going to push into that premium price range before we sell off. And on the flip side, if you are buying, we are going to at least come down past the 50% mark into the discount price range before we make the next impulsive leg of movement. Now that is basically the basic concept of premium and discount pricing. Now I would advise you to get your Fibonacci tool, strip it of everything except for the 0, 1, and 50 levels, and go and backtest that yourself and see if it's something you want to bring into your trading. Like I say, it's not something that I massively use, but I do think it's worth covering because I understand the concept. I've used it before, and I know that a lot of people also find it beneficial. So I may as well cover it here for you to go and backtest if you like that idea. Now, the thing that I personally bring into my trading is that 88 fib level. I don't use it so much for anything to do with entries, but it's a great confluence, and it actually provides a very good area to buy or sell from. Now, the 88 retracement level is basically the extreme retracement. It's a level I've plotted on myself, so I had to change my Fibonacci settings. If I just show you again, to add in the 88 level there, 0.88, and that is my extreme box. So if the market trades into there and I see a reversal taking place around there, it gives me extra confidence because usually, unless the market is going to break the trend, it doesn't go much further than the 88 retracement level. So if we have a look at this then, we had that first sell-off, we crossed into the premium price range, and then we had another sell-off, breaking the low. So if we mark the high of this leg of movement to the low, we will then see price came into that box around the 88% retracement and then started to sell off once again. Now we see this happening multiple times. If we go down to this area, obviously this is all in balanced price. Maybe we could try this area. Yeah, this one we just see a nice premium pricing sell-off. But this area just here looks like it's going to be a very clear 88% retest before selling off. So we connect the high to the low. And when the market came into the 88 level, that is where we then began to sell off. Okay, the 88 level is a very, very good area to actually build confluences and build ideas behind setups. Now in this setup here, and that is basically my use of Fibonacci. Short, sweet, and to the point. We don't have to go too deep with Fibonacci. I actually want to keep you more so focused on the things that I focus on, which is generally going to be obviously the market structure aspects of things. But as you can see, Fibonacci does have a place with this premium and discount pricing method. So if you want to go and backtest that and you think that that's going to be something that will bring benefit to your trading and is going to help you within your trading, then go ahead and do that because it could be very beneficial to you. Now, here's another one where we can see the market failed to tap in here and here and here into the 88. I actually had a buy on 840, which as you can see sits on the 88 level, and bam, we tapped in and then we flew, and that was a really nice trade. So when we're in an uptrend, connect the low to the high and then see what those levels are saying. Happens time and time again. The 88 is my favorite use of the fib level, but you can also, of course, use those Fibonacci boxes of premium and discount pricing. Premium being the area between 0.5 and 1, and discount being the area between 0 and 0.5. So what are my Fibonacci settings then? Well, here they are. I've removed everything. I have 0, 1, and 0.5, and they all use the same color to keep everything neat. And then the 88 box is a green box, and I've just added 88 with a green box there, and that is all good. And then I've actually got rid of the trend line because I don't like the way that looks. And that's pretty much it. And you can also get rid of the background if you want to, but I like to keep that on so that I don't, get it mixed up with trend lines or liquidity levels or anything like that. So that is my use of Fibonacci. I would advise for you that if you want to bring this into your trading, just go and back test those concepts and those principles I've spoken to you about. If you don't want to bring it in, don't worry about it. We're not going to go too deep on Fibonacci in the future episodes because for the most part, I just use price action. I don't worry myself with Fib. But it's there if you want to give it a go. It may be useful to you. So it's totally up to you if you want to give that a shot. So in the next video, we will be talking about the fractal nature of the markets. That's a very important and very interesting video, which is going to set us up to move into the high time frame application and the low time frame application. So I hope you've enjoyed this one, and I will see you in the next video.